Hello and good evening. Welcome to the third day of the Faculties Hub courseware series. I want to believe you can hear me loud and clear. If you can hear me loud and clear, please kindly give me a feedback on the chat box. All right, thank you. Thank you. Are you okay? All right, that's good. So we have a lot to do today. So it's important for us to start in time so that uh, we can end early. So yesterday we considered professional issues in the crypto space as well as usability and internet security. And pretty much the hallmark, or rather what we could take home, is making it out successful in the currency market requires you to man up, requires you to take the necessary precautions, to invest in yourself, to invest in learning, to invest in research, because you are doing yourself disservice, injustice, if you do not make decisions from an informed position. Well, whether you like it or not, you will make decisions, right? So is it not better you make decisions from an informed position? Thus, we considered what I will say um, custody concerns. We also consider thefts and scams. We also consider regulation. I mean, these are bridges we must cross. Now, pretty much, those are even external concerns, external challenges towards our goal to be successful in the industry. And that doesn't mean that there are not challenges that are also internal in the sense that is associated with our lifestyle, is associated with how we express ourselves in the internet space. Thus, we had to consider usability and internet security. And pretty much the hallmark or the take home from that model is the fact that we have been ignorant or we have been forgetful of the fact that in as much as we use our mobile devices to do one or two things in the in the crypto space, we tend to forget that we also use those devices to do one or two things in the web space or in the internet space, whether it's social media related, blogging related, entertainment related. Either way, it's important for us to understand that the way we behave, online has a tendency to either endanger our digital assets or protect it. Thus, we had to consider areas of vulnerability and how we can be secure. And I think we had a wonderful learning experience yesterday, which is great. Well, today we are considering what I call significant concepts in the crypto space. We needed to go through the models for day 1 and 2, pretty much so that whatever you learn from here, you should have known the boundary, the working principles or the working conditions, and how you can pretty much not only build on the skills, but most importantly, manage your portfolio. Thus, in today's module, we should consider these 3 key concepts. Hodling as a significant concept, FOMO as a significant concept, and thought as a significant concept. Hodling. What is hodling? You may be new to the crypto space. Excuse me. Maybe new to the crypto space. You may have had 1 or 2 people. You may have found it as a cliche in the space, and you oftentimes may get confused, or you may left with no option but to ask yourself, what exactly do they mean by hodling? Cryptocurrency hodling is just a jargon or a slang that stands for to hold, just misspelled intentionally. The D that ought to be the last letter was brought in the middle, and the L that should have been in the middle was taken to the end just to give it that funky feel. But it oftentimes refers to you retaining a certain crypto asset, retaining a certain crypto asset for an extended period of time, even throughout a highly volatile market movement. The hodl concept is meant to encourage you and me not to impulsively sell our digital asset in the market just because it just rises up in value or drops in value at the short term. But most importantly, hodling is all about only selling your asset when it is highly profitable to sell. I think I need to make this loud and clear. The whole objective, the basic rudimentary of hodling is only to sell when it is what? Highly profitable to sell. Of course, you are left with no option but to ask, then, when is it highly profitable to sell? So technically, what are we trying to say? Hodling means hold. And these are pretty much one of the simplest skills, market-related skills or trading skills that anybody can do. As I told you, this is pretty much a job start. Trust me, by the time that we're done, you will really find the motivation and the inspiration to even build from this. Okay? So hodling means to hold. The word hodling has been used in the financial industry for a very long time as part of what we call the buy and hold strategy. Okay? This investment method or this trading method involves you buying a certain financial asset and holding it for an indefinite period of time. I mean, some of you who are privileged to have found father, mother, or grandpa in the days where the stock market was the boom, pretty much those who were buying the likes of Nestle at, let's say, 2 kobo, and pretty much they sold it at 250 naira. And pretty much what did they do? They hodled. The whole idea around hodling is not just moving some basis points upward, getting some profit in the short term, and you kind of like clap for yourself. No, hodling isn't hodling if it is not around making the best profiting opportunity possible. Thus, hodling is related to the view that investors, now referring to you and me, should not be swayed by short-term market movements, but on the contrary, we should fix our eyes on the long term. The biggest reason why you and I should hodl, or the biggest reason why hodling has become a popular term, is the general volatility of prices in the cryptocurrency market. I mean, some cryptocurrency coins or some cryptocurrency tokens, even some NFTs, frequently have volatile swings. The price of one token can just fall 80% in 1 month. So something that is a dollar coin can go as low as 20 cents. And then on the reverse, few months later, will just reverse upward 300%. So what happens now when that coin was pretty much going down 80% and you respond out of emotions, not knowledge, and you are pretty much, wow, I mean, from $1 to 20 cents. So pretty much you bought, let's say $100, you used $100 to buy, in your own research, a performing asset, okay? So that $100 pretty much was going as low as $20. And you're saying, man, I've lost $80. So because of emotions, you now just say, well, let me just cut losses. Probably at when it was $40, you just sold that token. Well, to you, you are saving yourself the loss. And pretty much you will say, man, well, I'm okay with losing $60. But just after selling, so a few months later, that token reversed 300% upward. So pretty much your $100 would have been $300 if only you understand that the goal of hodling is to only sell when it's highly profitable to sell. Cryptocurrency prices are prone to movement of whales. In fact, right now, we not only have whales, we also have institutional investors in play. And pretty much these guys have the financial power to tank the market in either direction. Yet, a matured hodler knows exactly when to enter the market and knows exactly when to exit, sorry. A few information that can help you, pretty much as far back as this time in 2020, pretty much Binance, the BNB coin, was pretty much below $30 because it was at November, it was $30. So this time, 4 years ago, let me say in 2020, the Binance, the BNB coin was below $30. Just a year later, November in 2021. Now, I'm pretty much picking these numbers. I want to believe that this should resonate with the key information you should have take home with when we're covering blockchain, Bitcoin, and the landscape of cryptocurrencies when we're under the Bitcoin 4-year cycle, because you need to be a friend of time. It's never in your interest not to be the darling of time as far as the crypto market is concerned. So pretty much the next year, November 2021, that token from $35 moved as high as 650. giving someone who pretty much may have bought the BNB prior to November 2020 and selling pretty much around November 2021, a profit margin of around 1,800%. I don't know what's the current price of BNB as we speak, but as of the time that I was doing this documentation, BNB was pretty much what will I say? $300. Pretty much. Let's give it a sneak peek. Let's give it a sneak peek. BNB 500. 500. All right. So let's go back. 500. During that same time, the altcoin Cardano was pretty much hovering for less than 10 cents, about 9 cents thereabout. That same time, the next year, went as high as $2, giving somebody at least 2,000%. And this list go on. This list go on. So why do people hodl? People hodl because of the fact that they understand the underlying technology and the use case behind cryptocurrencies. Now, this is very important. Among the many use cases in the crypto industry, by extension, the blockchain space, currency market is a valid, mature, and profitable use case. In other words, you shouldn't be in the crypto market if you do not understand that it comes with a very high probability for you to make massive gains. All right? So that's why people hodl. They understand that with this market, just as other financial markets, there is the potential for gains, or rather profiting. Another reason why people hodl is that they appreciate the benefit that comes with long-term gains. In other words, making trading strategies for the long term in almost all situations, if it's in the right windows, they oftentimes come with gains, giving the participant that notion of store of value, most especially as that niche of industry or that niche of use case gains global adoption. What do we mean by that? As people come in to also express themselves, it wraps up the dynamism and pretty much brings about the whole thing around demand and supply. People hodl because it provides that safety gateway or that safety tunnel for investors. This is because the natural hodler is not exposed to short-term volatility, which pretty much comes with risks. All right. So this is beginning to give you the idea that there are also short-term trading strategies. All right. But hodling in its natural form, it's a long-term trading strategy. We'll go into detail some few minutes from now. So how do you hodl? Excuse me. How do you hodl? First thing first, you need to get registered with a cryptocurrency exchange, and you have a lot of options. I think most of you in the audience will not tell me you don't know how to get registered in an exchange. At least centralized exchange are not that hard, right? But if you don't know as you should, this is your time to build on yourself. Probably a a couple of watching of some videos on YouTube will get you acquainted and started. But the first step to hodling is getting registered in a cryptocurrency exchange. And we have two broad classification of exchanges, what we call the centralized exchanges and what we call the decentralized exchanges. All right. Either way works. The second thing you have to do is you need to import your capital. And your capital should be domiciled in what we call major currencies. All right. In other words, main currencies, because in exchanges is what we call trading pairs. All right. So it's going to be like A versus B, or A versus C, or pretty much A versus F. In this case, being this is A, obviously A is a main currency. B in this case is a counter currency. C in this case is a counter currency. F in this case is a counter currency. All right. So you need to import your capital. Of course, your capital as of now can be fiat. So your capital can be domiciled in the main currency as far as the exchange trading pairs is concerned, most especially for the coin you want to buy, which can be either Bitcoin, Ethereum, stable coins like USDT, or even native tokens of that exchange. Like for instance, the BNB is a native token for Binance. Digiphoenix have the Digitex as than their native token. If FTX was still live, the FTT would have been the native token. KuCoin, KCS is the native token. OKX, OKB is a native token. I think Bybit and the rest of them have their native token. So it's either you are purchasing a main currency or the native token of that exchange, most especially if it's a centralized exchange. When it's a decentralized exchange, based on the swap, let me just make sure. I want to check on something. Based on the swap and the blockchain in question, you can use the native coin of that blockchain, most especially now making reference when I talk about blockchain in question, oftentimes is in an open source blockchain. So it was pretty much a swap if the token you want to buy is pretty much a token that is built on an open source blockchain like Ethereum. So you definitely should be buying Ethereum as your main currency. If it's built on, let's say, the Ton blockchain, you need to buy Ton as your main currency, because in this case, it's going to be Ton versus the counter currencies. All right. If it's on Solana, you need to buy Sol as your main currency. If it's on Avalanche, likewise. And the lists go on. All right. So these are the first two things you need to do. Get registered in an exchange and get your capital. 3, research. You need to know what you want to buy. And this is a very, what would be the right word to say? This is a very difficult bridge to cross. With the noises on the space, with the noises on social media, it's pretty much very hard to kind of like pick a coin. But either way, Uh, Number three is not as is not independent of number four. I'll come to number four. But you need some basic research of what you want to buy. All right. What are the communities? What is the narrative behind what you want to buy? What is the community behind it? How well have that coin performed in the past? If, for instance, that coin has seen the previous bull cycle, or rather the previous market cycle. I mean, it's an important data for you. All right. If the coin did well, what were the peaks? What was the peak moment for that coin price-wise in the market? If the coin didn't do well, are there reasons for that? And is the narrative changing? Have the developers, the marketing, the community, the use case, the partnership, has a lot of positives been done that may change your perception about that coin? Research is important. You need to know what you want to buy. YouTubes can help you, blogs can help you, social media channels can help you, trends can help you. Because as far as the market is concerned, you should not be going against the trend. Time should be your friend. Trend should be your friend. Number four, and the most important one, is you need to understand the Bitcoin halving cycle. I can never say this enough. You need to understand the Bitcoin halving cycle. We considered this day before yesterday in detail. And I told you guys, if there's anything you should know by heart beside your Bible and your Quran, is the Bitcoin 4-year cycle analysis. When halving happens, what happens in the end of the first year vis-a-vis the first quarter of the second year? Do you know it by heart now? What happens in the second year? What happens in the third year? And what happens in the fourth year? Because that is a standard you have to use to measure how well a coin performed in the past, giving you an idea, maybe you should be hopeful or not hopeful. Because by the time that you want to make your investment decision on which coin you want to hodl with, it's important. For now, we do not know what the market narratives and the dynamism of the market in the future will be. But from history to today, Bitcoin is king. I gave you the reason why Bitcoin is king the day before yesterday. Because when we go to the market, we come to understand a very vital information. What's the vital information? A vital information on dominance. And dominance tells us that Bitcoin has attracted half of the total investment in the market. So oftentimes, if Bitcoin is moving to the east, Bitcoin has the capacity to drag the whole market to the east. Thus, whatever is the technical parameters that oftentimes moves Bitcoin to the east or move Bitcoin to the west, north or south, as the case may be, those parameters should be your structural boundaries to work with as far as you are talking about markets. Very, very important. So basically, at this point, we have to practicalize. All right? So oftentimes, no other guy that we oftentimes start with than Bitcoin. All right? We need to interpret the chart. We need to capture a lot of things into perspective. I hope we have time today. Today is going to be a long time. Please be prepared, because whatever we get today will definitely set in motion how you manage yourself as far as the industry or the market is concerned. So as we speak right now, please let me get a feedback. Screen is visible. You can see what I'm doing. Please give me a quick feedback. Thank you, John. Thank you. Thank you. So I think we are good to go. We are good to go. So pretty much the data analysis portal, I use CoinGecko. You can use CoinMarketCap. The BFI Masterclass students know CoinGecko is my most preferred because it doesn't have these adverts popping up bam bam bam, and CoinMarketCap have a lot of adverts popping. So please be glued to the screen and let's get done, because we need to analyze Bitcoin and pretty much pick the sensitive moments time-wise, and then apply those sensitive moments on any altcoin of our choice. All right? Then we will now see, let's assume we were in the market as of that time in the past. The implication is, if we had done this investment or trading strategy, probably this would have been our potential profit or even potential loss, if there be any. So right now, Bitcoin is hovering around 62K, decent price. But your most important section is this graph. All right, it has price, market, trading view, upward overview, market, news, similar coins, historical data, halving countdown. But most importantly, I want you to put your attention on these sections. All right. So the first thing you should do is, if you are comfortable to see the graph as linear, fine. But for me, I prefer candlesticks. So this is a candlestick icon. I click it. So it converts everything in candlesticks, and pretty much it gives me that funky professional feel. But this candlestick is under a 24 hours timeline. All right. You need to take it from 24 hours to maximum. All right. Now, when you click maximum, this is the chart of Bitcoin technically from day one to now. Day one as early as 2013, and today, 2024. So this is pretty much close to a decade worth of data. Now, let's not forget some important information. Bitcoin 4-year cycle, first year, second year, third year, 4 years. All right. There are 6 important things. In the year of halving, we said by the end of that year, up to the first quarter of the second year, the price of Bitcoin goes up. We then went further to say that by Q4 of that second year after halving, that even the price of Bitcoin even surpasses the previous price. So second year, there's a going up. But after that, they said market falls. All right. That this fall oftentimes goes all through the third year and even into the fourth year. We will never be seeing any sign of market reversal except a new halving is at sight. So this tells us that halving to halving gives us an idea of a market cycle. So for now, we know that in 2016, there was a halving. Excuse me. In 2016, there was a halving. In 2020, there was a halving. And we just saw a halving in 2024. Right? So pretty much 2016 to 2020, we need to interpret this area of data. This also requires us to also interpret 2020 to 2024. When we see a pattern repeating itself, it gives us this idea of to take note of what? The time. So let's look at what the 4 knowledge points of the 4-year cycle. So halving happened in the first year, and this year was 2016. In 2016, we now saw that by the end of 2016 up to 2017, the graph was pretty much doing something like this, right? Something like that, tilting up. But we saw that the peak, as far as graph-wise, was here. Whatever is the time here, if that coincides with the peak here, that gives us an idea of how long we are to hold Bitcoin. Thus, you selling Bitcoin here, you're just doing yourself disservice. Why? Let's not forget, the goal of hodling or the hodling trading strategy is to sell when it is highly profitable to sell. All right. Let me clean this so that our will be clean. Now, is it not good for us to have an idea of these peaks? So technically, if I take my cursor here, for this one is December 2017. Now, this coincides with the Bitcoin 4-year cycle. Why? The second knowledge point of the Bitcoin 4-year cycle told us that in the second year after halving, oftentimes in the fourth quarter, even though we may see other quarters, but historically, in the fourth quarter, we oftentimes see Bitcoin going at its highest price level. But immediately after that is a fall. And you can see immediately after, excuse me, immediately after, I'm coming. Immediately after this candle, the next trajectory or the trend was a downward. Now that's 2016 halving. Let's go to 2020 halving. The highest candle is this and this. And pretty much this is an October candle and this is also a November candle. Coinciding with the 4-year cycle, most especially the second knowledge point, saying that in the second year after halving, most especially in the fourth quarter, Bitcoin surpasses its previous price level. What do we mean by previous price level? For the 2020 halving, this was the previous price level. So this price level has surpassed this price level. For the 2016 halving, the ending of 2016, this was the price level. And this price level has surpassed this price level. So first wave of movement oftentimes is this. It comes down. Second wave of movement. For this first wave of movement, clean it. First wave of movement, little correction, second wave of movement. Oftentimes, this is where we oftentimes what? Sell. So pretty much everybody's beginning to get an idea of when to sell. The big question is now then, when should you buy? Technically, even from this graph, you will agree with me that if you will be able to buy before the halving, any time before the halving, you may have the privilege of buying whatever, or in this case, Bitcoin, buying it at the cheapest price whatsoever. So pretty much halving 2 was in 2020. If you also bought Bitcoin in this region and you were also selling in this region, just as somebody who bought in this region and is selling in this region, tell me that person will not tank on the profit. So oftentimes, hodling the right way has throughout history been associated with the minimum risks. Why? For heaven's sake, you bought it when it was cheapest, as far as that market cycle is concerned, and you sold it when it was the costliest. Normal market sentiment tells you you will end up on the positive. How much in the positive is a factor of luck, is a factor of blockchain, is a factor of market narratives, is a factor of market players, and you never can control that. But definitely you know that you are exiting more than you enter. And you don't need rocket science. It's only the big guys, the OGs, that will be doing what we call short-term trading strategy. So they were making profit, they are making profit, they are making profit. Well, you can learn that. But pretty much for you to be market ready, it's actually not my duty to teach you that. I trust your instincts, I trust your intelligence. On the contrary, I've just given you what it takes to build a profitable market. Whatever I'm doing right now is at the layman's level. So let's not forget where we're coming from. The 4 requirements, excuse me, the 4 requirements is what? Get registered in an exchange, get your capital, excuse me, research, know what you want to buy, and understand the market cycle. Now, let's apply those 4 things. I think I need my calculator. Let's apply those 4 things. Let's work with a capital that we all can resonate with. Let's not do it the OG way. Let's do it the local way. So pretty much a $50 capital for someone is hard work. Because to pluck $50 from your salary, your savings, it's not beans. All right. But somebody can say, okay, nah, you people are even trying, it's $50. Me, it's even 25,000 naira or 30,000 naira. Whatever the case may be, we are going to start with 2016. And to put things into perspective, let's get some valid information. Okay, sorry. Ignore this thing. USD to Naira, 2016. Let's have an idea. Okay, we're talking of 190 something Naira, right? 197. Okay. 2016, 257. All right, let's work with that. let's work with that. All right, where's my calculator? Let's work with that. So somebody was talking about 25,000 Naira divided by, now, we are going back to 2016. So please, just assume we're in 2016 because we just want to see how would have hodling if we're this informed in 2016 be, and how would have hodling be in 2020, because we just have data for the previous market cycles, right? So that is it. 25,000 Naira divided by, I think, 250 something, 253. That would have been $98. So we have $98. Now, halving happened in July, I think July 2016. So the best time to buy is before halving, except the market also gives you a privilege to also buy after halving. Like for you guys now, we are after halving, and you cannot change the hand of time, right? But most of the people who are positioned for the bull run have already bought whatever they want to buy. But because bull run is just about starting, we are still not in that end of the year or that December. Probably it offers you room to still buy. So let's assume you were not as constrained as you are right now, and you were that privileged. So if halving was in July 2016, anything between December 2015, January 2016, February, March, whatever the case may be, it was a best time to buy. So pretty much let's work to, let's say, March 2016. The price of Bitcoin opened, which is O, at $436, went to a high of 436. The low was 397 and closed at 425. So either way, if you were to buy on the 1st of March, you definitely will be buying Bitcoin between $390 to $440 thereabouts. So you can choose any number. Let's say you bought it at 410. You cannot be too smart that you bought it at the cheapest price, whatever, because definitely you would have met the market one way or the other. So let's say you bought Bitcoin at let's say 415. So your $98 will buy Bitcoin at 415. So divided by 415. So technically, your amount could secure you 0.23 BTC. So you have bought now. What do we say about the goal of hodling? You do not sell until it is highly profitable to sell. And knowing the Bitcoin 4-year cycle, therefore the fact that you bought it in 2016, you definitely know you'll be selling anything after 2017. Sorry, anything after 2016. So definitely 2017 is your best option to sell. And from this graph, let's say you are fortunate to have been in the market in this December. Of course, somebody who have sold in November will still have cause to smile. But the biggest exit strategy would have been in December. We entered December, it was $10,000. I told you people day before yesterday. But in that same 1 month, there was a blow off to $19,000. Of course, you never can tell me that you are that smart to have sell at 19. But probably you can sell at 15, 17, 18, 9, 18 something, 17 something. Probably the smartest guys would have sold 19, 100, 19, whatever. But let's assume you sold at 17, 900. So your 0.23 times 17,000, let's say 658, something like that. Your $98 would have multiplied to $4,200. And pretty much we're in 2017, right? So pretty much the exchange rate in 2017 was already 333. All right. So definitely you now converting this by 333 your 25,000 definitely would have turned out to be at least a million naira. What did you just do? Hodling. You got your capital, entered the market, bought Bitcoin here, exited the market, sold Bitcoin here. Of course, market will fall and you are not in the market. This is basic trading strategy 101. You don't need rocket science. You don't need to be a crypto geek. A lot of people who are informed have funded their retirement, built life savings from this. Quickly, let's do the same thing in 2020. So 2020, on the contrary, it was already 380 naira. We are still working with, I think we work with 25,000 naira, right? 25,000 naira. Exchange was 380 divided by 380. So you have the $65 capital, thereabout. And the halving was in May. So anything before May, you would have gotten Bitcoin. So technically, you'll see that Bitcoin was hovering between $7,000 and $10,000. All right. So you would have bought at 8,000, 9,000, 7,000. So let's say you bought Bitcoin at 8,700 per dollar per Bitcoin. It means that your startup capital, excuse me, coming. Your startup capital definitely will be 0 point, I think 2 zeros, yes, 2 zeros, 7. Now, you know that in as much as you bought in 2020, market oftentimes gets at its peak the next year after halving, which is in this case 2021. And we all know is Q4. So definitely your eyes will be around October, November, December. So pretty much October candle, Bitcoin was already at a high of 67,000. November candle, Bitcoin was already at a high of 69,000. Of course, you cannot be that smart. So probably you may have sold, since pretty much we are seeing a 60-60, pretty much you may have sold above 50,000, probably above 60,000. Let's say you sold at, let's say 61,000. Your 20, what's the right word? Your $65 have appreciated to $461. But this time around, we are in November 2021. So probably, let's see the exchange rate in November 2021. I cannot see any number. So pretty much it's already around 412, right? 412 times it by 412. Your 25,000 have given you 190,000. So let me clean this. This is basic hodling. All right, this is basic hodling. Why? The reason is because most coins at their cheapest price right before halving. And as Bitcoin appreciates, they too what? Appreciates. You can see it for Bitcoin itself. So pretty much let's quickly pick one altcoin. I'm racing against time. Let's quickly pick one altcoin. Now, let's not forget, if data about that coin is as early as 2016, it gives us room. All right, so I don't know what to do. Okay, let me pick two coins. Let me pick Ethereum. Let me pick Solana. All right, Ethereum, Solana. Ethereum, Solana. Solana, right? So what do we do? Let's not forget, this is our area, right? What do we do? Can convert it to candlesticks. What else? Take the timeline from 24 hours to what? Maximum. That gives you a whole idea, right? Now, if you look at the price pattern of Ethereum and Bitcoin, you will see that the patterns are what? Similar. In fact, from seeing a similar graph pattern, that's your first peak that this coin has a history of mimicking Bitcoin. This coin has a history of copying Bitcoin in price action. Because if you look at it, when Bitcoin was down, pretty much that coin was down. Probably when Bitcoin was up, that coin was up. Why? This is just to put a lot of substance to what market analysis have known, that because Bitcoin sits on close to half of the market share in the crypto market, anywhere Bitcoin goes, most performing cryptocurrencies, what we call altcoins, follow that direction. So let's not forget, so because data is as early as 2016, it means we can analyze Ethereum for the 2016 halving and also analyze Ethereum for the 2020 halving. So we can get two data, right? So this is how you pick a coin. You have different ways to pick a coin. One way you can pick a coin is how that coin has performed in the past, sort of. Now, does that give you an idea that that coin is going to do exactly the same number? No, but it's going to give you an idea that that coin is a performer. So your opinion about that coin is pretty much not neutral. On the contrary, you're on the positive side of the margin. All right. Let's not forget, for this cycle, we bought before halving and we sold here. Pretty much we sold in December. So if this candle is a December candle, fine, because you can never tell. We bought before March and we sold in November. So the first thing we'll do is that Bitcoin gave us the exits, right? The exit being here, December, the exit being here, November. Oftentimes, you may find a coin in the past that followed Bitcoin like month to month. You are up this month, I am up this month. You are down this month, I am down this month. So pretty much Ethereum, let's see whether this candle is a December candle. Look, you can see that this candle is a January candle. Pretty much a month later, but this is the December candle. So somebody who will make the investment decision based on Bitcoin, because pretty much is around that season. So let's take our calculator. So forget about exchange rate, was $95 and $65. So I think 90 something dollars. So 90, let's say $90 capital. And you bought before halving. Halving was in June, July. And pretty much you bought before July. I worked with February. I work with March. You can also work with March. And you can see during that time, Ethereum was, worst case scenario, $14. Best case scenario, $7. So you definitely will be buying Ethereum between $7 and $14. And let's say maybe you bought at 12. That means you were starting with a capital of 7.5 Ether. Now, back to the rules. When is the best time to sell? When it is highly profitable to sell. Please don't get confused because you saw this is a better candle. Because by this time, except you have grease, because you will be an emotional being. All right, your emotions will be high. So pretty much somebody who may be seeing that Bitcoin is already ready. Because this is a January candle. Hello, this is a January candle. Let me clean a little bit so that you can see. All right. This is a January candle. And Bitcoin is already going down, right? But on the contrary, Ethereum was even recouping the gains. I think based on natural emotional tendencies, I would still have exited in December. I would still have exited in December. And in December, it was as high as $829. It closed at 700. So pretty much, I should be selling it between 700 and 800. If I tiptoe into January, maybe I would have sold it above 800 because it went as high as 1,400. But let me not be too smart in my own eyes. Let me sell it at, let's say, between 700 and 800. Let's say 750. So I sold it at 750. So you see that the person who pretty much hodled Bitcoin pretty much made $4,000. But during that same time frame, the person who hodled Ethereum pretty much made $5,000. The whole idea is you entered the right time and you exited the right time. Stressing the point that the goal of hodling is you hold for an indefinite period of time. You don't understand what we mean by indefinite period of time. Holding between 2016 to December 2017 is close to 2 years of holding a performing crypto asset. It's not joke. You have to be baptized because the first thing you'll be doing is that every week you'll be logging into your wallet. You'll be seeing the thing changing and you're like, ha, ha, ha. Real hodlers do not sell until what? It is highly profitable to sell. Back to 2020, the halving was in May. So pretty much you buying before May was a good idea. So pretty much you can buy February, January, even December 2019, 5 months before halving, 4 months before halving, 2 months before halving. The market in the bear market is so low. Excuse me. The bear market before halving gives you ample time that prices are at their bottom level. Look at it. Every candle is a month. So if you count, it's getting close to 15, 12, 14 months where prices are low. If you buy anything around this time, it is considered that you bought when market was at its cheapest. And what do we do as a hodler? You keep. So pretty much for the 2020, I think we're at like $65, right? And pretty much you had the privilege to buy. Pretty much between 200 and whatever. So like for December, it's between $107 to a high of 156. So you would have bought it at 130, 120, 110, 140, something, the list go on. So let's say you bought it at 129, thereabout. So you had 0.5 Ether, right? When is the best time to sell? Now for Bitcoin, the two toppest months was October and November. So pretty much sentiment might also influence you to see. Let's see if the toppest month was October and November. The toppest month was pretty much November and December. But October, November, this was pretty much good month. And pretty much somebody would have sold in October, somebody would have sold in November. In November, it went as high as $3,900. Hey, as high as 4K, 4,800. In October, it went as high as 4K. So October, November, there's every tendency the price would have gone more than $3,500. This is 4.8, this is 4.3. So back to our calculator. How much will you have sold it? Don't know. 4K, 3.9, 3.6. Whatever be the case, you were selling in this region. Compared to this region, come on, you were selling on the high. Come on, you can never have that perfect exit or that perfect top. So let's say you sold at 4,039, 41, 42. Let's like ourselves too much. Let's say we sold at 4.5. The $65 would have given you $2,000. While the person who actually did Bitcoin during that time, his $65 actually giving $400 to $500. But you, it gave close to $2,000. Ladies and gentlemen, in a simple statement, this is hodling. This is hodling. Yeah. I just will need to do this detail because in the next module, income generating options, we are going to come back to hodling, but I think I don't need to go through this again because I have done it detailed, right? This is hodling. First thing first, what's the objective of hodling? That you should retain a performing asset until what is highly profitable for you to sell. Let's go back. Let's go back and see it. Here is it. No matter how it rises or it falls, that's not your goal. Your goal is that you sell at that window wherein it is highly profitable to sell. What does this tell you? It tells you that you need to be the friend of time. So for some of you who are starting the journey, if pretty much we are going to build on the Bitcoin 4-year cycle, you should not be selling anything this year. Worst case scenario, you should be thinking of selling your asset after the middle of next year. After the middle of next year. I hope everything is resonating and we are having value. Please, if you have been following up, please give me a feedback on the chat box. Let me know that we are moving. We have a lot to cover today, and I hope we do well. The second and third significant concept in the crypto space is FOMO and FOD. FOMO and FOD. Of course, they are abbreviations for fear of missing out and fear, uncertainty, and doubt. This is where your blood gets hot. This is something that has to do with money now. Excuse me. a minute. They've just taken light. Let me stop sharing. Let me do something quick. All right. All right. If it's visible, please give me a feedback. All right, we continue. So now we have understood a great deal, and it's important for us to build on it. Now, fear of missing out is an anxiety. I've gone through it. You will go through it. You are no way missing out on this. Fear of missing out, FOMO, is an anxiety. That anxiety that grips you when something exciting or something noteworthy is happening. Oftentimes is triggered by the posts people are making, how people are saying they've cashed out, they are cashing out. The cash out is just everywhere. WhatsApp, Facebook. So definitely something is happening in the town. All right. One perfect example is the MMM days, 2016. If you have done MMM, raise your hands in the sky. You are on your own. I'm on my own. We then had people talking about pH, GH. What's pH? What's GH? As if it is a university courseware, we began to see that this pH is a lot and this GH is a lot. Okay? And that took the web space, the social media platform by storm. All of a sudden, your friends, your cousins are cashing out. They are doing pH and they are getting the G. I don't even know which one should go first before the other, but I understand MMM comrades, you know exactly which one. So let's ride on. At that time, anxiety grips you. Ladies and gentlemen, the same thing happens in the crypto market. A time will come oftentimes when we are in the peak of the bull run, that the entire web space will be choked with good news. People hammer, this one make them. Of course, now you are beginning to understand what time of the calendar seems to be probable. Looking at the market cycle, right? Of course, the space is quiet now. But trust me, when the time comes, you will know, oh, this is the FOMO season. Yeah. Oftentimes, FOMO enters the market when prices of crypto coins, of course, led by Bitcoin, are pretty much at rocket high. And this is generating news. Meme coins are at the roof. Performing altcoins are at the roof. Layer 1s are at the roof. Layer 2 protocols are at the roof. Bitcoin itself even is also at the roof. Thus, it generates news, just as the way MMM generated news. Now listen and listen good. Excuse me. At that time, any investor that do not manage this news from the point of knowledge, excuse me, what's wrong with this thing? may do himself danger. Because at that time, the first thing that will come to your brain is, where will I get money? You don't even know what is the technology. You don't even know the mathematical constant that has brought about this price. And what is the mathematical constant that will also give you profiting? Just like what do we call it? The MMM. When you had it and you saw people cashing out, did you went and sit down and research about the founders of MMM for those who were in? The answer is no. Did you even sit down and research about the metrics? The answer is no. All you know is PH and GH, and that's the most important thing, and you needed money. So emotions took over your thinking faculties, your ability to view or make decision from a rational point of view. Ladies and gentlemen, there will be a time in the crypto space that majority of the players will make their investment decisions from the point of emotions, triggered by FOMO. Why? There is this opportunity that they don't want to miss out. Just after they have bought it, or back to our MMM, you just GH to or PH, whatever the one is. The time that you should cash out you wake up in the morning. I want to believe you did a very powerful prayer. I want to believe you even calculated what you would do, how you are going to bless some people's life, how you are going to, during that time, you know what you would have bought to flex your life. You have already done that calculation. It's 12 in the afternoon, no alert. 4 p.m., nothing. So by the next day in the morning, you now say, let me call this my MMM guys. Oh. You now call them, guy, what's happening? I don't understand. And they say, oh, you don't know? And you're like, I don't know what. And they are having server problem. That's the default talk now. Maintenance till the maintenance will maintain forever, as the case oftentimes is. So also in the crypto space, of course, you have seen the candle formation of the price action. You know pretty much just at the tip of when prices are at all-time high, the market sentiment begins to tumble. This is just default with the market. And most players who may have made their investment decision influenced by FOMO may be the victims of fraud, because fraud pretty much at that time, fear will grip you, uncertainty will grip you, and doubt will grip you. Because you just bought something from the stories or from the success stories of most of the players who are already cashing out. And you think, well, since they are cashing out, me too, I will cash out. Forgetting to know that most of these players actually positioned themselves probably 2 years ago, 1.5 years ago. And you were just joining at the tail end of the bull run. Oftentimes, this happens when you buy a coin at a very costly price, courtesy of the bull run. It doesn't even stop there. Then the web space then goes boiling with the sad news. I want to believe now it's beginning, you are beginning to internalize the reality. Bitcoin don't crash. Bitcoin have crashed. Bitcoin crash. Everywhere crash. The news that goes all through all media outlets is crash, crash, crash. Thus, users who pretty much bought at the wrong time because they made their investment decisions from emotions, not information, not research, not understanding how the crypto market works. Like for you, you're pretty much different because you now understand that the primary player of the crypto market is the big guy who sits on the biggest dominance percentile. Who is that guy? Bitcoin. You're privileged to have understand the economic model around Bitcoin. You understand the halving concept. You understand the minting process. You now understand how blocks are discovered. And you know at certain times, market gets scarce, but that scarce market gets diluted. So if definitely you're going to make an investment decision in the market, those facts should have influenced your investment decision. But for the person who pretty much was waiting for the web space to go boom and see people cashing out, that is pretty much the wrong parameters. And they are significant in a huge way because those have been the instrumentation that have made a lot of people make massive losses in the crypto space. Thus, it's fair to say that buying assets out of FOMO most certainly result in you taking actions triggered by fraud. Because worst case scenario, you are going to sell your coins just to reduce your loss. This concept have been the main reason a lot of people experience losses in the crypto space. If you're thinking of starting your journey in the crypto space because you want to make lots of money that will improve your life, then you shouldn't be concerned about not buying anything, but you should be more concerned about when are you buying that thing. It's not just buying anything, it's when. It's a function of when. You should understand this. Your ability to understand the crypto market cycle is gold. This is a sneak view of the 2016 market cycle. What we just did on the chart. Prior to halving, the price of Bitcoin was around $600. The smart guys bought Bitcoin around that time, which is pretty much July 2016. The market then went as high as 19,700, which is the December of the next year. Now, this is the time where it was making news. This is the time where everybody too wanted to cash out. This is the time where FOMO ruled the game. But for those who made investment decision or the perfect hodlers, that was the time they were exiting the market. After most of the players entered the market went into what we call market correction. So the price crashed from 19,000 to the 2 to the 3K region, which was around December 2018. Only for the market to close around $8,000 when a new halving was about to happen. If we are to go to details, we realize that by December 2016, Bitcoin just crossed 1K. A lot of people interpreted that as market positive sentiments. Most players had no idea. Until December 2017, when we were just entering December, Bitcoin was already 10K. That was when news started booming. Now, for somebody who already bought around $600, trust me, at 10K, that person is just thinking, I mean, the decision is pretty much it's time to exit. So worst case scenario, the person was just looking for when should I go out, but profits I've made. But because this was pretty much the market reality, FOMO kicked in. People who pretty much were doubting this Bitcoin thing were pretty much having a rethink. And while they were even contemplating, the price went further up to 13K. Now, this is just a matter of days. Then came life stories of people who bought Bitcoin when it was 300K, and now pretty much they've made like 2.5 million. At this point, it became a general opinion or a general notion that this Bitcoin is not a scam. By the first week of January, which pretty much vis-a-vis 31st of December, Bitcoin was already 19K. Now, that was the time that everybody jumped into the wagon. It was at that time that FOMO kicked. Everybody jumped into this wagon. Everybody wanted to make these overnight gains. Thus, FOMO started because they were afraid of missing out on this massive profiting opportunity. Some borrowed monies, others used their life savings with hopes of greater returns. Only for the few who pretty much bought Bitcoin when it was below $1,000, or pretty much they bought it around that 800, 900, 600. That was the time that they began to sell. Of course, the market was too liquid. A lot of people are coming in, so you have a lot of buy offers. You only choose the best buy offer because they will buy from you, the seller. So pretty much some exited making 1,900%, 2,000, 3,000% for the sake of Bitcoin. In the case of Bitcoin, I mean. But the rest who bought at over $15,000 began to see that the market is not actually going up. Because for you to even make 100% from 15, the market must reach 30K for you to make 100%. While somebody who bought at $900 already made 1,900%. Like times 19. And you are only looking for, in fact, 50%. Because for you to see 50%, this price must cross 20K if you are the type that bought Bitcoin at the 15K mark. Because price was not going up, panic began to set in. And the worst fears happened. Price began to wind down. Of course, you who have understood the concept of hodling, you now understand why. Some began to sell at lower prices to cut their losses. Others could not even sell at all, as all their finances got swallowed. The sole reason for this is because most of these actors acted out of emotions, and that emotions was created from the FOMO of 2017, 2018. None of them acted on knowledge of the crypto space. None of them understood Bitcoin. None of them understood the Bitcoin halving cycle, because if they did, they would have known that the right time to make their buy call or their investment decision was around the halving corner, which was in 2016, not late 2018. The same replicated itself in the 2020 season. The price of Bitcoin went as low as 16K. Yes, this very season that we are in, the price of Bitcoin went as low as 16K. Nobody saw it as an opportunity to buy. Until when Bitcoin was pretty much around 50, 60K, everybody started entering crypto again. Even in that, even after 60K, price of Bitcoin crashed. That's December 2023. Let's check it. Let's check it. Let's check it. Excuse me. Where's Bitcoin? This is Bitcoin. So pretty much, let me do a little thing. Let me zoom. Let me do between 2023 September to February 2000. Aha. So this is 2023. What did I do? That's not what I was asking for. Excuse me a minute. What is this? No. 2023 December. Let me do it again. October 2023, 18th. 2024 September. Yeah. This is it. You can see as of October last year, Bitcoin was even into 20 something K. I think around December 2022, it was even in the 20K, or I think 16K thereabout. Nobody saw it as a buy option. And even now that we are talking of 63K, nobody is seeing. But this time next year, Bitcoin is already $100,000, 110, 120. The whole space is going to go kaboom. Everybody is looking for money. He wants to do crypto. Everybody is looking for money. He wants to do crypto. And that is how FOMO plays into the emotions of the majority of the players in the crypto space. Don't ever make the decisions of making your investment decision from fear of missing out. We are just starting this crypto era. Always research, always gain knowledge, always get informed on how the cryptocurrency space works. It is vital for your appreciation of the crypto space. This is an information-led niche. Information here is the raw material. The most successful people in this space are also the most informed. Let's not forget, for the 2016 to 2020 cycle, the market around halving was, Bitcoin was around $600. Then went high to 19, fell to 3, and closed at 8. In the 2020 cycle, the market started at 8,000, went as high as 64, then broke 64 and went as high as 68, 69, then crashed to 16. We do not know. I was thinking the market will close at 49, but the market closed around, before halving, closed around 60 to 70,000. So my prediction of 49,000 as of April 2024, I was wrong as of the time of this documentation. So thank you. Before we move to the next module, excuse me, I'm getting feedback that those on Facebook are not having it. Okay, sorry. They're having challenges. So let's see. Okay, it's being viewed. All right. So, questions. Questions. Any question on the chat while I prepare the next slide? Okay. Your question about sell orders and buy orders, of course, pretty much is a technical question. Pretty much too advanced for most of my audience, but let's see how I'll answer it. Oftentimes, Oftentimes, there's no such thing as price hitting a target too fast. Orders are a function of liquidity. All right. If your order did not reach, is because price and volume do not resonate. All right. Probably the price you wanted to sell reached, but the volume you wanted to sell, there was nobody to match that order. And if there's an order above your order and still the volume is lower, worst case scenario, you only have a fragment of what the counter buy order can buy. All right. But most conditions that makes things favorable for your orders is if the price matches good and the buyers, the cumulative, those on the buying side, the volume they want to buy also matches the volume you want to sell. That's a deal. What's my price for Bitcoin for the next bear market? Wow. You're asking me questions that market professors should answer. I don't think I have the credentials to say. But tomorrow, we are going to have a sneak view of what we should expect. What if the coin you want to research does not have a historical data? That's good. That's good. How do you analyze it? You have to use other parameters. You cannot use historical data. You're now left with fundamentals. You're now left with the technicals. So first thing is you guys can now believe with me that prior to 2016, there was no historical data for Ethereum. So the data in Ethereum's favor prior to 2016 probably is the Ethereum community, the dApps around Ethereum, and pretty much the fact that Ethereum has a massive community. So pretty much these may be things you should look at. So what are we trying to say? It means that you should not be bent on only buying coins, excuse me, bent on only buying coins that, what's the right word? That only have performed in the past. There's always an opportunity for a new entrant. Then you have to do research and know what you're talking about. What is the community? What is the project? What are their roadmaps? Are these indicators that is going to do fine? Haven't done that. When then do you buy? I think you should buy at the right time, right? A project coming out the ending of next year. Yes, it's a new project. It's very promising. And well, if the whole idea is for you to make profit, well, you should be thinking of maybe you thinking of buying it in the next bear market. All right. In doing research, which coin to buy other than Bitcoin? What are the things to look at technically? Price-wise, how did the coin perform in the past? Technology-wise, what is the project? What is the blockchain? What is the technology of consensus? What is the community? What is their roadmap? Who are the faces behind it? All right. What are expert opinion about it? But the most thing is the marketing strategy and the community behind it. All right. What are the best sites to do research about the coin or token apart from YouTube, CoinGecko? Well, there are more. But the YouTube CoinGecko pretty much is you analyzing data. CoinGecko cannot give you CoinMarketCap. CoinGecko cannot give you information that is not built on historical data. So what if the coin is a new project? Old project that have at least seen the previous market cycle. Yeah, CoinMarketCap or CoinGecko can give you room, give you data that you can analyze. YouTube, excellent submission from YouTube, not just some people who are just doing content so that they can trend and make money. I'm talking about people who pretty much are seasoned analysts, market analysts. You can subscribe to them. They also have personal blogs and personal channels. You can also do that. You can do your reading. You can go outside crypto and study about financial markets. How does financial market works? How you can use case studies around stocks, bonds, stocks, and pretty much some other things. You cannot do this without being dumb and deaf to political arenas. Because why? We talked it yesterday now. Regulators are a stakeholders, and regulators are governments. So right now, whether you like it or not, we are rooting for the presidential candidate that is going to be blockchain friendly in America. Sorry, it's not a gender thing. Sorry, it's not a sentiment thing. I don't even know what are the basic colors, but if the player was on the reverse, me, who pretty much wants to be profitable in the crypto market, I am sensitive to political players in the arena. America is a very sensitive place. Most of the performing blockchains are pretty much built by technocrats from America. All right. ETF is a roadmap, and pretty much the geographical location is. So pretty much and pretty much when it comes to global adoption, most of the active player in the crypto space, user group wise, developer wise, institutional investor wise, and even regulatory wise, come from that side of the world. So you cannot just be blind to political arena and things like that. So I think so. What is your prediction of the bull run? We'll talk that tomorrow. Um, if someone buys a coin at a high price prior, let me see the question again. If someone buys a coin at a high price and the price dumps, does it affect the quantity of the coin? No, it doesn't affect, but the dollar value of the coin. In fact, that's pretty much the reality. Because the whole idea is, why were you in? You want to make money. And what you just buy, the price are falling low. It becomes something to scratch your head about. What are the factors that determines that a coin will do well? I've discussed it. What you just explained about relates to layer K blockchain. I heard that it is, well, that's your research. You heard that it is promising. You think also it's in the mining stage. You need to do and also do research about what is the momentum that is gaining around that narrative. Zero knowledge, layers, layer one, layer zero. These are all narratives, right? So I think we have done a great deal. I think we're good to move to the next module. Let me check in with the live stream. Maybe there's a technical problem. Just a minute. All right. So there are questions on Facebook. I think the question sent by Daniel have answered it. All right. All right. We're good to go. We're good to go. So welcome to income generating options in the crypto space. We have done a great deal of establishing the boundaries, right? That can give us the opportunity for making income. So pretty much we are moving straight to what are the available options in the space that you can make income. Some of these options will require you to have some capital. Some of these options will require you to have no capital. Some of these options will require you to have plenty capital. Either way, it meets many audience. Second thing, my motivation for selecting these options, I'm pretty much a fan of what I call minimum risks. All right. And that are not the only income generating option in the space. After all, I expect you to build from it. All right, the battery in my mouse is going down. Okay, so let's start. We are going to consider these options. We want to consider the hodling concept again. We want to consider ICOs, airdrops, cycle trading, staking, masternodes. All right. It's already raining here, so probably we may be having technical glitches because it's a heavy downpour. Please manage with me. Hodling. I think this is not a new thing. I think you guys know this guy. Hodling refers to you retaining an asset, as I've said some few minutes ago, and you hold it for an extended period of time throughout a highly volatile market movement. We established the fact that hodling is meant to encourage you and me not to impulsively sell our coins, even when the price drops or rises on the short term. What should we do on the contrary? We have to keep it and only sell when it's highly profitable. Investors, you and me, should not be swayed by what happens on the short term, as long as our view is long term, not just hours, not just months or years, but define months, define years within the boundary of the market cycle. How do you hodl? I've already highlighted this. Get registered in an exchange, get your capital, research, and understand the market cycle. All right. I think we checked on hodling. We considered Bitcoin and Ethereum, right? So we are good to go. ICOs. ICOs stand for initial coin offering. Pretty much the crypto version of initial public offering, how people buy shares, right? And pretty much imagine this. Let's assume you are a tech startup guy or lady with a great idea. and your great idea is to build a cryptocurrency system, perhaps for the education sector, those who are players in the education sector, those who do online training like me now, who's doing an online training, pretty much if it's being hosted on your blockchain, pretty much there are incentives in currency. People can pay through that currency, and I, as a tutor or a coach, can get paid in that currency. So pretty much we call that coin a teacher coin. The only problem is you need money from people so that you can build this idea in the sense of building the software, the policies and stuff like that, licensing, I don't know, those things. Now you can go to the bank, pitch your idea, or go to a venture capitalist so that they can invest in your idea. But you and I know that with the bank, you have to give a collateral for you to get a loan. And also, a venture capitalist will need you to give him a significant portion of the equity or the ownership of your company before he invests. But what if you can raise money without losing any part of your company? ICO is your answer. ICO stands for initial coin offering or initial currency offering. Please, are you guys hearing me? It's so noisy here. Can you guys hear me? It's super rainy. All right, thank you. Thank you. That means I can go on. Initial coin offering or initial currency offering is a type of fundraising for cryptocurrency projects. All right. Oftentimes through crowdfunding, but we also have private ICOs. All right. Now back to our teacher coin. Here is pretty much how it works. You are going to create a document detailing how your currency projects and the narratives and the use case intend to work. This document is oftentimes called the white paper. You're supposed to make a pretty good website and explain why this your currency project is an awesome idea. You can go as far as even giving us a roadmap or a timeline. So we are in 2024. All right. All right. So what happens in Q4 of 2024? Probably will tell us testnet, okay? What happens in Q1 of 2025? All right. Are you building a single only blockchain project? That's blockchain and currency, or you are building your currency on an existing blockchain? And which blockchain? Is it an Ethereum blockchain, a Ton blockchain? You know, these are details that you are going to give. All right. Q2 2025. Are we going to have a wallet infrastructure? Is the wallet desktop? Is the wallet mobile? What is your narrative? How have you submerged yourself in the ecosystem of your use case? What about the stakeholders in the education system? Do they recognize you? Kind of. Yes, they recognize you. Which part of the world? Is it a Western affair, an Asian affair, an African affair, or you have gotten the endorsement of all players worldwide? Are the top universities considering adopting your currency as a medium of payment for tuition fees? The list go on. All right. So pretty much in your website, you then ask people to send you money oftentimes in cryptocurrency, Bitcoin, Ether, you can even have an option of payment for credit card, as the case may be. But for everybody who pays you money, you are giving the person a receipt that when the coin goes live, that amount that the person gives you have secured XYZ tokens of your teacher coin, probably 1 to 100. So any $1 should give the person 100 tokens or 100 coins. I want to believe you get the gist. Of course, the coin is not live. So pretty much the person is going to get an electronic receipt. Probably an electronic receipt in the back office of that user on your website, or electronic receipt under a smart contract temporarily. So pretty much when testnet is over and you are live, you definitely will have to communicate with all those folks to follow modalities of converting or claiming their coins. All right. Investing in ICOs will not result in you having ownership or stake in the parent company behind that tech blockchain or tech currency project. You are just trusting that this worthless currency idea you are paying for now will increase in worth and make you some decent profits. There have been many ICOs that have been a great success, while there are even more ICOs that failed. ICOs are considered risky, even under the best of circumstances, and they have a high probability for scams. You just cannot tell that this beautiful idea will materialize into a tech solution. One of the crypto projects that began as an ICO is Ethereum. Hello, yeah. Ethereum raised, I think, $18 million at the price of 35 cents per Ethereum or per Ether, far back 2014. I think Binance also did an ICO. Tezos did an ICO, okay? One strong way of locating an ICO that can be a success in the future is knowing who is the brain behind the idea. Faceless developers okay? He or she must have a name, a location, and a history. This information should be verifiable. In fact, we also need information about his or her team, right? Not only that, those players, are they known in the industry? What do we mean by being known in the industry? When you go, you're flooding your team with the likes of Jay-Z, Beyonce, politicians like Kamala Harris, Donald Trump. These are not known players in the blockchain industry. All right? So this is not what we mean by people who are known in the industry. We're talking about people who pretty much may be part of the team that founded the Solana project. If you're somebody who was in the Solana project, somebody who was in the Ethereum project, somebody who have been in the Cardano project, and now you're building your project, it's a fact that you're a known character in the industry. Okay? As I've said, we can also go as far as saying people who also have worked with tech giants like Microsoft, Apple, Google, they pretty much have some reputation to defend, right? Just that you should know, boxing superstar Floyd Mayweather Jr. and DJ Khaled once promoted a Central Tech ICO. That ICO raised 30 million, in fact, close to double of what Ethereum raised at the end of 2017. But Central Tech was ultimately considered a scam in the US courts. And these two celebrities, Floyd Mayweather Jr. and DJ Khaled, had to settle with the US regulators. As of August 2020, Central Tech founders or co-founders pleaded guilty to ICO fraud. You need to do your research. Okay? You need to do your research. ICOs are barely regulated. Well, now, with the advent of ETFs, we are beginning to get regulatory presence. So probably the future of ICOs will pretty much have regulatory presence, probably. So do your research, read the white paper, research the team members, and make sure they have a history in the crypto industry. In 2018, news.bitcoin.com reported that 47% of ICOs that started in 2017 ultimately ended as a failure. Those projects included the Swiss Coin project, the Bitcoin Go project, Chain of Coins, and Brush. ICOs as an income-generating option in the landscape of whether you need capital or not fall under the category of that option that you need capital, because for you to buy in, you need to spend some money. Probably much, probably little. The project will decide. Another income generating option is airdrops or airdrops. All right. Airdrops is a distribution of a crypto token coin, usually for free for most of the times, to numerous wallet addresses. Airdrops are primarily implemented as a way of gaining attention and new followership, which should result in a larger user base and a wider disbursement of the coins. Airdrops can also be promotional activities typically performed by a blockchain startup with the idea to bootstrap their projects. This aims to spread awareness about the project and get more people to use it, and by so doing, trade it when it is listed in exchanges. So the brain behind airdrops is the fact that you cannot just bust into the crypto market just like that without paying significant money. Pretty much in the beginning, exchanges pretty much boast that they have users. So because they have users, excuse me, if you want to build a cryptocurrency project and pretty much you want users to use your coin, you have two options. The first option is for you to go to an exchange, the likes of Binance, Huobi, KuCoin, the list go on, that you want to list your projects. Of course, they have users. So when they list that project, trust me, users will have the privilege to speculate on your coin. And by so doing, you may have global presence. But that comes at a cost. It goes for as low as $3 million to as high as $10 million for the big guys. Okay? That's option one. But you have option two. Option two is for you to run an airdrop. So pretty much you run promotional activities These promotional activities has to do with promoting your presence. So whoever who will end up get your coin distributed to his wallet has some tax to do. All right. I think I don't need to say much. Pretty much the space is taken by storm by different airdrops or airdrops initiatives. It requires you to do a lot of sharing, recommending, referral, social activities, system activities. You can also do, yes, in-system activities like going to the test net and doing some swapping, doing some staking, doing some things to generate data worthy of global presence. And then you get reward. As I've said, to qualify for the gift, participant needs to hold, for some project, minimum quantity of some coins. Some project will say you need to have a minimum quantity, or you need to have a wallet address that has a history of transaction, or you need to fund that wallet. Alternatively, other projects will need you to perform some tasks like posting on social media, connecting with people, and sharing about this startup blockchain project. Okay. In the graph or in the landscape of income generating options, if we are to ask the question, do you require capital or not? For most of the airdrops, you don't require capital. And later on, we are going to harmonize all this. This is pretty much your gateway of pretty much building a crypto portfolio without capital. Airdrops can offer you that gateway. Pretty much when they are enlisted, you definitely can take the proceeds, having done research, and start your hodling journey, as the case may be. This now takes us to another income generating option, which we call cycle trading. Now that my mouse is pretty much down, I don't know, I'm going to have challenges. Let's go back, sorry. Cycle trading is also a trading strategy that is a long-term trading strategy. How can I put it? Well, let's go. For you to understand cycle trading, you need to understand the concept of cycles. All right. You need to understand the concept of cycles. Because cycles are prevalent in human life. Everything in human life can be calibrated in a cycle. Animals have life cycles. Systems have cycles. Even the planets, according to science, have a cycle. Weather have a cycle, climate have a cycle, sort of. It's in this sense that markets also have cycles. In fact, any business terrain that you find yourself and you have not done yourself that favor, excuse me, let me check. All right. Any market terrain that you find yourself, you're into commodities, you are into oil and gas, whatever. One best way for you to be on top of the game in that market niche is for you to understand that's the market cycle of that market. Thus, virtually most markets go through the same phases in their markets. And those market phases are cyclical. In other words, they repeat themselves. Technically, there is a time where markets tempo is risen. So market rise. When it rise, it reaches a point that the market cannot go beyond that limit. At that point, we say the market has peaked. Later again, market fall. Then even as far as market fall, there's a point where market cannot go below that limit. We can say that market bottomed out. Only for the market to rise again, peak, dip, and bottom out. And the more this repeats, the more you begin to see that the market, price-wise, is going through what we call cycles. When one cycle finishes, another cycle begins. That has been the practice. The problem here is most players in this market, and to be specific, crypto markets, fail to recognize that even the crypto market is cyclical. And even those who may have the idea that the crypto market, as all currency markets, even if they try to understand that, yes, there's some sort of cycle, they fail to pick when one starts and when the other cycle starts. It doesn't stop there. Another significant challenge is you never can pick that perfect entry gate for a given cycle, and that perfect exit gate is impossible oftentimes to get that perfect top or that perfect bottom. But an understanding of the cycle is essential if you really want to maximize your trading returns. Here are 4 major components of any given market cycle. With cycle trading, just as hodling, is all about how much, it's not about how much you are pumping into the market in the sense of buying or selling, but when are you buying it and when are you selling it? Of course, this resonates with hodling, right? Yeah. So pretty much for markets, excuse me, there is this accumulation phase. Let me use maize or rice. The rice market, this pretty much looks like that harvest season where everybody planted maize and there is maize or rice everywhere. Oftentimes, economically, there will be less demands for maize because pretty much everybody was a farmer. And there is so much maize or rice in circulation. So demand is low. And because demand is low, if you must sell, you better be selling at a cheap rate. Else, why would somebody buy costly? So this is pretty much that phase. Then we now come into the markup phase where foodstuff begins to finish. Farmers have exhausted all they have, and there is scarcity. So because of that, price of commodity begins to go up. Then reach this point where the price is at its toppest. Pretty much at this point, we have seen signs of raining season. And pretty much it's raining season. People have planted maize or rice, as the case may be. So they're only waiting for it to be ripe. So pretty much whatever is the price here, there's every tendency it cannot go high because As of the time that we are about harvesting, price begins to come down, only for it to come into the accumulation phase. And we now have new cycle of harvest associated with price fall. We chop everything finish, market, we then start entering scarcity, market go up, market peaks at the top, raining season comes, we plant again. So you should begin to see there is a defined cycle. In the crypto space, it's also a cycle powered by halving. So like here, this is pretty much where we're in the bear market. Every miner is mining. So plus Bitcoin for every block they discover. All of a sudden, halving happens here. Because halving happens here, the reward that they get is no longer the same reward that they got yesterday. So even though you want to buy, they will tell you, shishi, we are not selling it at that price. Why? Even me that got the Bitcoin, I only got half of what I used to get yesterday. So trust me, it's not profitable for me to sell it for you at this price. You, crypto exchange, you begin to ask, so what's the price I will buy? Higher. You come tomorrow, higher. Come tomorrow, higher. You win the negotiation, higher, higher, higher. Then pretty much it reached this point where even though the excuse me, even though the miners want to sell higher, there's no more cash in circulation. All the monies that are trooping into the exchange have already come. So pretty much this is the top. But the miners still have to continue mining. And because they are mining, they need to keep their infrastructure running, electricity, data uplink, hardware maintenance, the list go on. But there's no money. So while they are even willing to sell, exchange don't have enough cash. These are the time where, let me do this. Excuse me. This is the time where, let me go up. Market cap, okay, let's do it this way. By this time, market cap is very low. By this time, market cap is very high. Dollars have been pumped into different projects, courtesy of the scarcity of Bitcoin. Of course, you know, half of the money is into Bitcoin. So the whole idea is that this scarcity created a market sentiment. Just as you, let's say you are into the petroleum business, you know that next week the price of petrol is going to go high. So what do you do here? You buy so much fuel and stock in your gas station, in your fuel station, and you will not sell, right? Probably you sell a little bit here and you lock. You sell, you lock. Why? Some people will just buy as much as they want to buy and they will not sell only here. Let's take the Nigerian state, for instance. Let's say you are an oil marketer and you had security info that after the election, during inauguration, the Nigerian president, President Bola Ahmed Tinubu, in his inaugural statement, is going to remove subsidy. Now, this is a fundamental information that can affect the price of petrol. Just like halving is a fundamental event that affects scarcity, right? So you knowing that on this day, inaugural day, that will happen. And when that happens, we're going to go back to queues. Prices will go up. And in fact, you are predicting, then it was 197. You are predicting that pretty much 2 to 3 years later, and pretty much here, we should be talking about 1,200. Now, this is 107, 190 something. So pretty much you are getting a reality that courtesy of that event, you may see close to 1,000% in price increase. Because by the time that we are in 1,900, we have reached 1,000%. So you invest upfront, buy as much oil as you can, and hoard it. And voila, you sell here. All right. Then it happens that we then go into a financial crunch. The economy of the Nigerian state then crash. Yes, there's no subsidy, but at the same time, there's no cash. All players have fuel, but there are no vehicles. Nobody is buying. Come and buy. We cannot buy. Why? We don't have money. What if I reduce it by 2%? Will you buy? People buy. All of a sudden, it's costly. I reduce, I reduce, I reduce. So pretty much, this is what happens at the tip of the bull run, that the market have absorbed so much investment that everybody is counting their losses by selling tokens. All right, by selling Bitcoin or selling whatever. Because probably most of the players here are the ones selling. And because they are selling, or rather they have sold, and there are no more buyers, and miners are already minting more Bitcoins, exchanges pretty much may have the upper hand. So they will buy for lesser price, buy for lesser price, buy for lesser price, buy for lesser price. Then halving happens. In as much as the buyers, exchanges, have the upper hand, the seller, the miner, no longer willing to sell. Why? Whatever he was making, the halving algorithm have reduced it by half. So he, in fact, cried blood tears. He's not going to sell. Ladies and gentlemen, from here, halving to another halving, we have gone through what we call one cycle. In that cycle, we went through a bull run and a corresponding bear market. People who understand this concept can even make money through the bear market. Thus, when another halving happens, it triggers a new trend, another bull run. Then comes the bear market, which pretty much oftentimes ends in another halving threshold. So this is another cycle. All right. So how do we trade the cycle trade? So we're going to go back. Excuse me, sorry. We're going to go back to our guy. How do we do? Wow, Bitcoin just shoots. Okay. 0.8%. So what do? We go to candlesticks. We go to what? Maximum, right? All right. So let me begin to break it down. For now, you realize that cycle trading is pretty much like an advance of hodling trading. Because for the hodling trading, let's do it like this. What's wrong with my mouse? Excuse me. A minute, please. Okay, let me clean it. All right. So for cycle trading, sorry, for hodling, we were only interested in when price was going up. Why? Our whole idea is to buy low, sell cheap, right? And after selling cheap, we exit the market. Worst case scenario, we come back here, buy, sell here, and exit. Whatever is happening during the bear market is none of our business. But for the cycle trader, he realizes that there may lie an opportunity even during the bear market. And I'll explain. So oftentimes, I use layman market scenario to explain some of these truths. So let me clean so that the screen will be not dirty. So let's work with rice. I've already given you the entry and the exit window, right? So we can simulate an entry and exit window for, let's say, a rice commodity. You and I are into the rice market. And just as everybody has a capital, we also have a capital of 100,000 naira. Now, for somebody who pretty much feels well positioned for the market, the best time for him to enter the rice business probably is during the harvest season. Probably the price of rice is low. So he enters during the harvest season, something like prior to halving. So he enters here. So like for you, probably by that time, the price of rice is 14,000. So your 100,000 naira buys rice, excuse me, at 14,000. So technically you are having about 7 bucks. So what do you do now? You do what the hodler does. What? You keep it. You only sell it when it's highly profitable. And for your market cycle, now we're talking about the rice commodity. Of course, you should have a market cycle. For that rice commodity, probably 5 months, 6 months, 7 months from now, probably the post-Christmas time, or even around the Christmas time, you just know when rice is going to be costly. I have predicted that when it's costly, it's pretty much going to reach probably, let's say, the 45K, the 50K. So instead of you selling your rice when it was 14K, you kept it off-site. This is pretty much what we call hodling. Only for you to bring that rice back into the market when it was 52K. So you now sell it for 52K. Your 100,000 now have appreciated to 371,000. Now a hodler will just thank his stars and go home, but not the cycle trader. Because the cycle trader, even though he has existed here, he is eyeing here. And he does not want to bring external capital. On the contrary, he wants to reinvent this profit into the second cycle so that he can make further profits. Of course, he needs to consider body and soul. So in this situation, he may make some investment decision. How much can I take from here just to flex and keep the rest as my new capital? So he said, I'm going to take 70% or 80% of my capital. Of course, his capital was 100,000. So he says he's taking 80%. In this case, we are going to subtract, excuse me, I'm going to subtract 80,000, which is 80% of his capital. So this 80,000, he's going, whatever he does with it, does it. But he has left 291,000 to buy back rice during the next harvest season. So the next harvest season comes, which there was a bumper harvest. And unlike the former harvest season, rice is no longer 14K. Rice is pretty much hovering around 19K and 21K. So pretty much he buys rice back. He buys rice back for, excuse me, 20,000 per bag. You now see that he just finished one cycle. And in that cycle, he has turned his initial commodity, 7 bags of rice, to 14 now, without adding no capital. Now he is targeting the next market peak, which will be associated with scarcity. Probably the last market cycle, rice went as high as 50K. He's predicting this time around, we are talking about 85, 86, probably 90K. So even though price of rice goes as high as 90K, if he sells it at 89, 87, 86, 86.5, it's gain for him. So he now takes these 14 bags off-site, only to bring it back when rice is already scarce. He doesn't need to do any kind of negotiation. In fact, even if he sells his rice at a discounted price, it's gain for him. So he comes back to the market, finds that the market at scarcity is hovering 90K, 89. So he sells his rice to retailers at 82,500. Sorry. That's 1.2. Let's not forget, 2 cycles ago, he only began with a capital of 100,000. Pretty much took 80% of his capital to keep body and soul together, reinvent the rest, and now he has increased his portfolio to 1.2. This is just pretty much 1.5 market cycle. So he now decides that this time around, let me flex. Let me take pretty much 400,000 for myself. Whatever he does with the 400,000 is his own. He has 800,000 for the next market. Technically, what are we talking about? He is eyeing this to enter the market again. By the time that he enters the market now here, he has done 2 cycles. Ladies and gentlemen, the same apply to the crypto market. We can replicate the same thing in the crypto market. In fact, this is one strategy, long-term strategy, that has come with 0 risks and has helped people fund their retirement. Let this sink in. I mean, are you guys hearing me? Is the screen still visible? Can you hear me? No glitches. Thank you for that feedback. All right, thank you. So we're going to do a little cycle trading. Probably, we don't need to do Bitcoin. We already did Bitcoin. So pretty much we're going to do Ethereum. We're going to simulate it. But now, let's get this first. You are not... So the first thing is that when you pick a coin, it is not the coin that gives you the boundary for entry and exit. No. It is this guy that gives you the entry exit. You are going to work out. Why are we doing that? We all know that the market, the currency market, has been fine-tuned to align with the Bitcoin halving cycle. Halving happens, price go up. It reach a point, price crashes. Only for us to reach another halving, price go up. So from halving to halving, then gives you the boundary of your cycle. It means that the crypto market cycle should run every four years. This is an important fact to work with. Probably in the future, we may have other market narratives. Pretty much when they bring more money into that use case than crypto markets, then maybe our attention will leave markets to those places. But in the meantime, the biggest active use case in the blockchain or crypto industry is the crypto markets. So if that's the case, it means that we need to do some simulation. We are going to cycle trade Ethereum across 2 cycles, market cycles. What do we mean? We should buy here, exit here, probably buy back here, exit here, probably buy back here, and probably we are waiting for when to exit. From buying to buying, you just did 1 cycle. From this buying to this buying, you just did another cycle. Probably in the next bear market, if you buy again, you just did another cycle. And in 3 cycles, you will not believe what will happen. So why don't we play our game according to the rules of engagement and see what will happen. Without wasting time, let's establish the parameters. Excuse me. Let's establish the parameters. Any data we are going to work with, since we are using Ethereum, I think we are going to use Solana again. Yeah, we're going to use Solana, Ethereum and Solana, because they give us different data. Any data we are going to use Bitcoin as our boundary. Boundary in the sense that we should buy before halving, sell when Bitcoin is also about to sell, probably buy again, sell when Bitcoin is about to sell. So for the 2016 halving, let's get our numbers right. The highest candle was what? December. Hello? For the 2020 halving, the highest candle was what? October, November. Let's not forget these 2 exit windows. Probably buying, we buy before halving, and probably we can buy before halving. So having done that, Having gotten this peak, let's go back to Ethereum. All right, let's go back to Ethereum. Let's start with 2016 to 2020. Where's my calculator? All right, let's shift the calculator somewhere here. All right. So let's work with our capital. Let's work with $50. Let's work with $50. So pretty much we are privileged early to pretty much we want to cycle trade Ethereum. All right. So buying is not a problem. We are coming from the hodling school. So to hodl is not a problem now. We have our capital. We go to the right exchange and we buy Ethereum. Somewhere before the halving. Somewhere before the halving. All right. So if we bought it in November, probably 6 months before halving, Ethereum was even less than $1. But if we wait till 2016, close to the halving, we can see that it was costly. Somebody, I mean, this tells you that way before halving, there's ample time for you to buy it cheap. So let's say we bought it in November 2015. Halving was July 2016. So 7-8 months before halving, we got our capital and we bought. And pretty much it was on a low of 78 cents on a high of $1.1. So pretty much we can get it as cheap as 70 cents and as costly as $1. So let's say we bought it at 92 cents or 98 cents. So we bought Ethereum at 0.98. So we are starting our cycle trading journey with, let me see, how many Ethereum? 51. So we started with 51 Ether. All right. But in this first phase, we are doing the normal thing. Hodl now. So pretty much, even though it went as high as in January, but pretty much somebody like me would have sold in December. Why? My eyes is glued on Bitcoin. And pretty much Bitcoin had a peak in December. By January, Bitcoin was already taking the red candle. So probably that red candle in January, probably the first few weeks of January, even if I want to see what magic that can happen. Seeing the red candle on Bitcoin will inform me, hey guy, let's go out. So pretty much, let's say I sold at $804. So I sold at 804. So I have $41,000. Now, there are two things we need to trash and trash very well. Don't be too excited and forget that there is drama. What is the drama? You just made, let's say it, 41K. But of this 41K, you are eyeing to buy back Ethereum here. But of this money that you have, it's not all that will come here and buy. Of course, you need to keep something for body and soul. But this body and soul, you also need to make what we call an excellent expenditure strategy. Because you see, this is where you are. The next time that you may be selling whatever you be buying is here. And between here and here is a long waiting time. So you need to allocate something from this 41K to make sure that while you have kept whatever you have kept for the next bear market, conditions of life, economy of life, whether it's COVID-19 or not, will not force you to dip your hand into your vault wherein you kept what is ready for the next bear market. I hope you guys are following. And you need to have a view of how long it takes. So if you have sold here, and the next time you are going to sell should be here, because only after you have sold, you are going to know what you do with the profit. Is it not good for you to have an idea how long it takes? Well, let's count, because every candle is a month. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40 months. 41, 42, 43, 44, 45, 46. You need to budget for 46 months of being what? Silent. You get this wrong, cycle trading might not be successful. Thus, then comes what will be your strategy. Now you have many options. One option is you can keep 10% for yourself and 90% for the market. You can keep 20% for yourself and keep 80 for the market. Keep 30 for yourself. You can keep 70 for the market. You can keep 40 for yourself and allocate 60 for the market. And you can do the 50-50. That's 5 options. You can also do the reverse. Keep 10% for the market, 90% for yourself, 20% for the market, 80 for yourself, 30, 70, 40, 60, 50, 50. What are we saying? Of these newfound profits. And whatever you have kept or you will keep for yourself, you have to see it in the light of what? 46 months. Will what you have kept for yourself keep you going? Hello? Will it keep you going? That's an important question worthy of note. You miss it, you miss out. Let me allow it to sink in so that we can continue. All right, we're back. So you will make your investment decisions, but let's copy this number, $41,000, 41,020. And let's say we are allocating 40% for ourselves and 60% for the market. So in other words, 40% for ourselves is going to be times 0.4 because 40 by 100 is 0.4. That says that we are allocating $16,000 to keep body and soul together. Now, it may look as if it's beautiful, But for us to know whether it's a healthy expenditure strategy, knowing what our finances should entail, we need to divide it by 46 months. That tells us that we shouldn't go beyond $350 worth of expenditure every calendar month. And if $350, okay, I'm getting feedback that I'm cracking. How about now? Better or worse? Am I still cracking? Clear now, thank you. So technically, $350. Now you will be in the position to agree, okay, $350 is okay. I mean, come on, I'm fine. For now to the next 46 months, yeah, you then convert, because this is what happened. At this point, you should convert Ethereum to a stable coin. This now takes us to the question, what are stable coins? Stable coins are cryptocurrency that are stable in price. Let me give you an idea. Stable in price in the sense that one coin is equivalent to $1. Even though the screen is dirty, put your eyes on price. You will see that when we reach a coin, we'll see that the price is 1. That tells you that this coin is a stable coin. When you convert your profitable crypto to a stable coin, even in the bear market, that coin will remain fairly stable. We can scroll down, we will see that we reach a point of a coin 0.999, approximately 1. That's another stable coin. We scroll down, our eyes is glued on the price, and we reach a point where we see 1. That means DAI is a stable coin. We scroll down, our eyes being glued to 1. That's just the price we are looking for. We don't want anything that has any other thing. But anything that is 1 kind of tick our boxes. And it's like we are not seeing anything 1 again now. Where are the stable coins? Where are the stable coins? Where are the stable coin? Where are the stable coin? Okay, we now see a 0.999 and pretty much a PayPal USD. So what are we trying to say? Back to Ethereum. Back to Ethereum, sorry. Oh. We're trying to say that at this point, we have already converted, sorry. It means that we selling our Ethereum at 800 or whatever dollars, it means that we converted it to USDT. So technically we had 40,000 USDT, 40,000 USDC. And in this 40,000, 16,000, excuse me, 16,400 was what we kept for ourselves. Now, we don't care to know what you did with yourself about that. Now we care about the next market. So pretty much 40,000 and 20, we allocated 60% of the market for it, of the price for the market, so times 0.6. So we now have 24,000 to buy back Ethereum here. So it means that as we enter the market here, we are supposed to enter the market anywhere here we choose. All the prices are low. We can buy Ethereum in September 2019. We can buy Ethereum in July 2020. We can even buy Ethereum as early as December 2018. You see, from 2018 up to 2020, over 2 years, price were low. So you will not have any problem buying at a cheap price. So let's say we bought at 2019, any month, December 2019, the price is 117 for low, 156 for high. So let's say we bought at 125. So we bought Ethereum back at $125 per Ethereum. It means that our portfolio standing is no longer 51 Ethereum, we have 192 ETH. While we still have an excess of some tokens to keep us going. Now we are back to the hodling. As a hodler, what do? We sell when it's highly profitable. And for the 2020 season, November and October were the best month. So this is October, this is November. And in November, so let me clean this to make it cleaner. So, and in November, what do we have? We are seeing Ethereum going as high as 4,800. Probably would have sold at 42, 4139, whatever the case may be. So we now sold at 4,200. That gives us what? 800,000. Now this is somebody 6 years ago. Because let's not forget, we've just dusted 4 years. And now we are going into our next 4 years. And at this point, it's 2 years. So 4 points plus 2, we are already at the 6th year. And pretty much this is what we have. Of course, we should do another expenditure strategy. That's the truth. You can change this time around. Probably you don't want to do 60, 40, whatever. Whatever you do, make your decision. So let's say pretty much, let's copy this amount. Let's copy it. So about 800,000. And let's say you are allocating any amount. Somebody should give me an idea on the chat box. Let's work with it. What should be the expenditure sharing formula? Quick one. I'll take the first submission on the chart. 30/70. Okay, smart. 30 for yourself or 30 for the market. Just break it down. Smart, I've chosen yours. 30/70, 30 for yourself or 30 for the market. 30 for myself, 70 for the market. So pretty much what we're trying to say is times 0.3. So you have about 240 something thousand dollars for yourself. If you divide it by about 46 or 47 months, it means you have 5K. This one has arrived though. This one has arrived. And pretty much we're talking about 2020. Come on. So you have about $5,000 to spend in a month. Even in that, excuse me. So I'm going to change the system. So I have a low battery indicator. There's no light. So I'm going to pause and come back. A minute, guys. 1 minute. All right. I'm coming back right away. So while the other system gets booted, um, so I think you're beginning to understand that in as much as the hodling trading strategy comes with low risks and opportunities for massive gain, it also translates that even cycle trading even gives you room for more massive gains. You are only exploiting the cycle. And you exploiting the cycle has a tendency of you building massive wealth. I mean, let's look at the case study we just checked. Ethereum. I think time will not allow us to even check Solana, but I think we'll try and check Solana before we go to the remaining section of the slides, and we call it a day. Thus, you begin to see that there are a lot of avenues for making earnings. Now, when somebody sits here and now tells you the massive money that can be made on the short term, intraday trading, trading futures, DeFi, and the list of the opportunity that exists in the crypto markets, you will be amazed. And probably the more we grow, the more these opportunities don't avail themselves. But in the last bull run, we have seen massive return on investment. We have seen coins that gave 30,000%, 10,000%, 15,000%. And even if you're working with a steady ROI for every cycle of, let's say, 3,000%, and your capital is around that $100, there's every tendency working with the 3,000%, you are on road in the right direction to fund your retirement. This is pretty much where I tack this cost to where funding your retirement. It has nothing to do with disrupting your career, disrupting what you do to make ends meet. But definitely short-term trading strategies, just like Forex, you need to give time to be on the system. But you can see with the hodling trading strategy and as well as the cycle trading, you enter the market as a certain window. You even do probably 3 to 4 calls across 4 years. Of course, from massive research, you enter the market, you make your buy call, you keep it. You then enter the market at the peak of the market to make your sell call. Then you do your expenditure strategy. Whatever you have allocated for re-entering the market, you keep it offline or offsite, only for you to enter the market when the market is ripe in the next bear market. Excellent strategy, right? But it's a product of research, knowledge, and putting your emotions in check. So as we continue, excuse me, as we continue in our learning journey, this is your take home, and you're expected to build a lot from it. Technically, I am rooting for you all. Coincidentally, for you and me, the market is still right. I mean, some of the performing assets are not all that, what's the right word? Are not all that away from the price they have been. Thus, offering you and me that opportunity to still have that opportunity to enter. But let's not forget, even in cycle trading, what is the goal? Excuse me. The goal is you do not sell unto what? It is highly profitable to sell. Let that stick in and let that sink in. All right, a minute, please. Okay, let's continue. Let's continue. One minute. So, if the screen is visible, please give me a feedback. Let's try Solana. Let's try Solana. Very quick. All right, visible, right? All right, thank you. Let's try Solana. So what do? We convert it to candlesticks, take the time frame to maximum. Aha. You can see that pretty much the number that we have is a 2020. So pretty much this coin was registered in just the recent bull run. For the 2020, should we check? We should check Bitcoin was at its highest in the November candle and the October candle. What of Solana? What are the two highest candles? Which candle is this? This is the November candle. So it means that Solana also mimicked the Bitcoin. For someone who really wants to hodl, what do he do? Simple. You buy here, you sell here, and you buy back. And pretty much you'll be waiting for when you will sell. That's pretty much standard practice. Okay. So quickly, we are working with the $65. Here, what was the price of Solana? Halving was in May. So pretty much April, May. Solana was 50 cents, 80 cents, whatever the case may be. Let's say we bought it at 80 cents, divided by 0.8. That gave us 81 Solana. When is the best time to sell? When it's highly profitable? Something around this calendar. Solana went as high as 256, as low as 182. I don't know what would be your best selling price, but pretty much should be above 180, right? Sort of. So let's say you sold at 210. 210, that gives you $17,000. Probably you apply the 60-40. You kept 40% for yourself and 60% for the market. So times 0.6, $10,000. And now you now came back to buy Solana anywhere here. Here you can get it for 19, here 19, here 19, here 19, here 17. So pretty much minimum of 19, maximum of $30. So let's say you bought it back at, let's say, $24. So you now have 246 Solana. Even if you sell Solana for the price it is today. What's the price of Solana today? Of course, you are not supposed to sell. Well, let's assume this is a sell call, 147. $62,000. Well, bull season have not started, and somebody's already sitting on the positive. Very, very important for you and me to understand. Divided by 147. So let's say Solana goes as high to a 3 digits. It's already a 3 digits. So let's say Solana becomes a 4 digit, $1,000, $2,000. I mean, 1,200. Technically about $500,000. Cycle what? Trading. So let's rush. We're racing against time. Oftentimes I spend a lot of energy explaining hodling and cycle trading so that we all can get room for learning. Staking is an income generating option. All right. As I maintain, I am selecting, excuse me, I am selecting income generating options that comes with the least risks. All right. So what is staking? Staking is pretty much you giving up a cryptocurrency you bought, contributing it for some blockchain, DAO related activity. You're offering it for liquidity. You are offering it for DeFi services. And the blockchain rewards you with additional coins. All right. You should probably, by the time that you are retiring, one best way you can make best use of all the funds you have made is through staking them in one or two ecosystem DeFi related services. All right. So in a similar way, staking is like depositing your money in a high yield savings account in the bank. The bank will lend your money to people who needs it, and the bank will give you a quota of the interest. So participants who are trying to earn a chance to validate new transactions, offer lockups. They offer to lock up their cryptocurrency in the form of staking as an insurance so that they may have some additional reward. All right. So staking is equals to buying some coins and locking it in the blockchain 247, and the blockchain mints or rewards your wallet address with additional coins. All right. To be very specific, is a future of proof of stake blockchains. How do you stake? You buy the coin, you transfer it to your wallet, you activate the smart contract, for staking in the blockchain, you get stake. Or you join a staking pool. Some exchanges can also stake for you. All right. So what are the staking options? Ethereum. You need pretty much like 32 Ethereum to stake. You're going to make about 4% of your money per annum. Cardano, you need a minimum of 1 Cardano to stake. You make about 3%. Solana, you need about like minimum of 1 Solana to stake. The last information I have is about 7% returns on investment. CRO, you need a minimum of 1 CRO to stake. Can make up to 10% of your capital. Cosmos blockchain, you need minimum of 1 Atom. You can make up to 20% return on investment. Okay. Masternode is also an income generating option in the space. Mind you, I'm choosing the options that comes with the least risks. There are many things that you can do that brings you high yield, but at the same time, it comes with some significant risks. These are pretty much stuff that pretty much you can just go and sleep. You only have to worry about intrusion, which we considered it yesterday in security. You need to consider about either you being hacked or you delegating the wrong players or something. But as of the infrastructure is decentralized, okay? Protected and proven. All right? Masternode is like the advance of staking because unlike staking, where you just have to do it from your wallet, Masternode, you have to build an infrastructure. All right. When I was explaining proof of work for Bitcoin, I told you how you have to have a node in the blockchain where you have a complete copy of the blockchain. Well, proof of stake blockchain also have a DAO or a node infrastructure, and those nodes are called masternode. All right. They are distributed computers that are connected to the blockchain, and they keep running, or they have a complete copy of the blockchain, which runs 24/7 based on the consensus algorithm. See, blockchain and cryptocurrency will not work without nodes. Nodes are like the pathways that keep the blockchain running, verified transactions. Let's not forget where we came from. What were the function of node in the case of proof of work? Verification. And for verified transaction, what does the node do in the blockchain? Record, right? It is actually machines that do. I oftentimes liken them as the telephony masts that we have that pretty much bring about receptivity because of the mobile telephony mast that we have. We can receive calls and make calls. So consider your phone or your SIM card as the wallet and the mast as the nodes that pretty much are on standby to pick every broadcast, process your transaction. Of course, this is why you pay network fee for every transaction you do. And the community of nodes share either from the treasury allocation from the blockchain developers, or they make their reward from the network fee that goes. So, but it definitely requires an upfront investment, okay? There are different type of consensus. I considered proof of work 2 days ago. A perfect example is Bitcoin. Proof of stake, unlike proof of work that you have to work, proof of stake, you have to prove you have a stake. So pretty much here, you have to go and buy the coins of that blockchain, lock them up on the blockchain for you to have a right to run a node. When you are no longer ready to run the node, you can use your cryptographic credentials and unlock the collateral, instantly you go offline while you take home your collateral. So that's proof of stake. Proof of space and time is also an algorithm where you offer hard drive space for what we call farming. The blockchain uses your hard drive space for the consensus activity. When we say hard drive space, I'm not talking about your 20 gig or 30 gig. I'm talking about people who can offer 3,000, 2,000 terabytes of hard drive space. One perfect blockchain that does that is what we call Chia network. Come in, let's see. Let's see if we can have it. Chia network. I think we can find Chia somewhere. CHIA. Yeah, Chia network. So this technology, this blockchain runs on a proof of space and time. All right, Chia network, proof of space and time. I think it went as high as 1,600, right? So what are we trying to say? In this blockchain, if you have 4,000, 5,000 terabytes, not 1 terabyte, so 4,000, 5,000 terabytes of hard drive, you configure your workstation and you give it up to the blockchain where others can farm on your space. Just like the concept of farming. You have a land, a farmer needs the land to farm, right? So you giving up that land, probably for a ground rent or, those kind of things. That's the way it is at the blocks. Decentralized, of course, fully decentralized. Okay. So proof of work, I told you, is all about solving a mathematical puzzle. Example, Bitcoin, Litecoin, proof of stake. We have Ethereum, Dash, Energy, DeFi. The list go on, Solana, the list go on. Proof of space and time, etc. We also have proof of authority, delegated authority, the list go on. So Masternode pretty much requires you to lock or freeze your collateral. In exchange for that, you have a right to run the node and you benefit from the revenues, all right? Masternodes are valid options for earning passive income. You just go and sleep. Your nodes are actually minting and minting and minting. All right. Masternodes form the backbone of a proof of stake blockchain because they provide resources, they deliver services beyond relying on blocks and transaction. In return, those who are running masternodes will receive a significant portion of rewards available on the network. But setting up a masternode requires configuration skill. So pretty much it's a little bit techy, it's a little bit advanced. Worst case scenario, you need to be conversant with Linux operating system at the command prompt. You need to know how to install Linux, or you need to be conversant with the Linux syntax, the sudo this, sudo that, as the case may be. These are some masternode options. DeFi chain. All right, DeFi chain. DeFi chain, you need at least 20,000 DeFi chain coins for you to run a node, and you'll be making about 26% per annum. So let's check it. Let's check it. DFI. What's the price of DFI? Okay, it's 2 cents. It's 2 cents. Let's check the guy. This is the guy that fell from Max, candlesticks Max. This is a guy that fell from $5 and now it's 2 cents. Calculator, where are you? Excuse me. Calculator. Where's the calculator now? So 2 cents, right? Let's check the price. 0.022. And you will need 20,000 of it. So you have to spend $440 minus hardware, minus server fee, uplink, downlink, as the case may be. But you'll be making, let's get it. Let's see. You'll be making what? You'll be making 26% per annum. So pretty much, what are we saying? Your 20,000 coins will mint 0.26 every year. 5,200 coins you'll be minting. If you divide it by 12 months, you'll be minting about 400 coins. Now, the beauty is just like the hodler. The beauty is if you buy now and in the bull run, probably the price go up to all-time high, which is $5, $4, $5, as the case may be, while you bought at 2 cents. Come on. It means that every month is going to be pretty much times 4. You'll be making 1,700. Just, and don't forget your collateral, which is 20,000 coins, times, let's say 4, will definitely be $80,000, while that is minting something for you, okay? All right, so that's DeFi. Dash. Dash, you need 1,000 Dash coins as collateral. You make about 7.5% per annum. So let's check Dash. I think Dash is an old guy. Dash. So Dash is $25. Whoa. And you need 1,000 coins, bar. Yeah, 1,000 coins, 25.11 times 1,000. What did I just do? So you'll be needing $25,000 as collateral to run a Dash masternode. But your 1,000 coins will mint 7%, 0.07. You should be making 70 Dash coins every year. We divide it by 12. That's 5 Dash coins every month. Currently, it will be pretty much, you're making $145 every month. But let's look at it from a tokenomics point of view. This coin fell from 1,400 in the 2016 bull run. In the 2020 bull run, went close to 500. All right. So pretty much, if you are making 5 coins per month and it goes as high as 500, let's say it surpasses the next bull run, the all-time high in the previous bull run, let's say it's a $500 coin. You'll be making 2,005 every month. But a little bit technical. All right. Pack protocol, you will need 500,000 pack coins for you to run, and it's about 25% per annum. So let's check pack protocol. Pack protocol, PAC. Pack protocol. What's the price of pack protocol? 0.123. Let's get it. Copy. Paste. What do we have? 500,000 times 500. This 5 million. So you need $17. to run it outside server hosting and other things. Your 500,000 coins will mint 0.32. 160,000 coins every year. You divide it by 12. That gives you about 13,000 coins every month. Let's look at Path Protocol from the year. So it means that this coin went as high as 0.1 cents. When was this year? 2018. Went as high as 1 cent in 2021. So pretty much, let's say it goes back to all-time high again, times 0.018. You'll be making $240 every month. Okay, let's forget. So energy, so this is the blockchain I also run the masternode. The collateral is you need a minimum of 1,000 to 100,000 energy coins. So let's check it. 1,000 to 100,000. So let's check energy. Energy. Here is it. It's a 6-cent coin. And what do they say? You need minimum of 1,000 times 0.0688. So you need $68 minimum or maximum 100,000, right? 100, 1, 2, 3 times 0.068. 6,800 between either 68 to 6,800. Am I right? Yeah, something like that. So what is the ROI? About 25%. It's a little bit lower than 25%. I think it's around 21 now because I run a node. So pretty much your 1,000 times 0.2, thereabout, you're making 200 coins every year. Divided by 12, you're making about 16 coins. Now, I think last month I made 17.6. 17.6, yeah. So you times it by 12. That's about 21%, yeah. 21%. So now, what's the benefit in the bear market? Probably 6 cents. But if you look at it from a market cycle perspective, this is a coin that fell from $9, $10 in the 2000 and in 2019, and pretty much $4 in 2021. All right. So let's say the 1,000, the collateral that you pretty much spend 60 something dollars is giving you 17. And let's say it goes as high as $4. You're already making 60 something dollars every month. Thereabout, while your collateral has moved from whatever to the new price. So in general, the crypto space has a lot of room for income. But on a truthful claim is going to, excuse me, on a truthful claim is going to take a considerable period of time all right, before you max out. First and foremost, is not a get rich quick scheme. All right. You must invest time. You must invest research. You must also invest resources. All right. So thank you very much. So that is it. Any questions before we call it a day? So tomorrow is the last day, and we'll be considering what the future holds for crypto. All right. So it's pretty much like a freestyle. This is where you and I we have what we call a town hall or what we call a round table. And I just tell you some things that I have researched, some things that I think look forward to. So pretty much again, we zoom out. We begin to discuss what are the potential implications of this industry for you, for me. How far can it go? All right, how far can it go and stuffs like that? It should be an interesting and rewarding session for all of us while we now have session to discuss further on how we can continue as a community. Technically, the reason why I'm running this class, trust me, you guys are super lucky. This information is nowhere close to free. You will have a privilege to rub minds with those who run this session last year. They paid with their nose. I mean, even at discount, it was very costly. But again, one thing that I and Vindicated Chidi have been doing for a very long time is giving to the community. And sometimes we used to ask ourselves, is it worth it? Because one of the languages we've heard from you guys is that you guys don't value knowledge. I mean, look at it. A majority of you guys have known us all this while, but refuse to invest in knowledge. And we'll talk more about it. But the whole idea is totally not in our favor if we do not build ourselves and we become a community of informed minds in this Web 3.0 space. Totally not in our favor. I mean, a predominant population of us come from third world countries. And if we do not take the opportunities that comes with the Web 3.0, we're doing ourselves great disservice. One thing that we can speak in the advent of web technologies is that it has broken down barriers, national barriers, some things that you can never have in this side of the world except you travel overseas. Now you have it, right? So that is it. So there's a question about Masternode. Okay, yeah, yes. Primarily, running the Masternode is my primary source of income. All right, that's the main thing I do. And I can also run it on behalf of clients, but I have standard fees. All right, I don't really like talking about it publicly. But if you're interested, we have to book for an appointment. All right. I have to do it the business way. Okay. Manir Abakar. Okay. I used to run a Pi node on testnet phase. Please, is it profitable for running Pi node when open mainnet starts? Please, what are the best master nodes to run, especially on Bitcoin layer 2. So you need to do a lot of research. Probably you research about Lightning Network and how you can come in from an infrastructure level. Lightning Network seeks to build, the Bitcoin Lightning Network seeks to be an excellent layer 2 on top of Bitcoin. Yeah, running Pi is also excellent. Excellent. Most especially if you're running a super node, not just a node. Those who are running Supernode on testnet pretty much should be migrated to mainnet. So this is how the whole idea works. As I've understood from the Pi Network's white paper, currently, it is the servers. The Pi Network currently right now is run by the emulator servers by the Pi core team. All right. So it's pretty much centralized now. While there are nodes who are running on testnet, the whole idea is the Pi Network team want to compare data coming from the testnet community and their emulator servers, such that those data are running parallel. Why? Because at mainnet, the testnet servers will take over the network while the emulator servers will be shut down. So at that time, it's going to be fully decentralized, and that's where you make the incentives. Where will the incentives come from? Probably from the treasury allocation, or probably from the gas fees. Either way, it's definitely going to be rewarding, all right? Yes, master nodes need to be online. As I told you, I run a master node. There's no part of Nigeria that can give me power 24/7. So I subscribe to a virtual server. I think my server is in Singapore. So I pay every month for hosting the server. And I think this is I started running my node 2020. So yeah, November 2024, I'll be entering my 5th year running the master node. All right. It's advisable for you to set up your master node at the bear market. Why? During the bull run, your collateral increase in value, your reward also increase in value. You can see how it's a win-win. There are a lot of people who run their node during the bull run. It tells you that when the price fell, yes, they are making their node is minting tokens and coins, but the dollar value is also low, right? So that is it. Okay, from what you've explained, the hodling enables scarcity and pumping of prices. No, hodling does not enable. All right. The factors that brings about scarcity and price pumping are pretty much external. All right. It's just that, just like fuel is fuel, right? You buying fuel does not mean you entering the petrol business does not mean you are the one who pushes things up. It is economic factors, right? If the economy are better, things are better. When the dollar value falls, when the naira value falls is a reason for the price of fuel to go up, right? So let's say you know that the naira is going to fall against the dollar, and you are in the oil business. That alone informs your investment decision, right? So you now buy probably 200,000 liters of petrol, and you keep it. You buy the 200,000 liters, it's like hodling. But when scarcity comes in, you now get value for buying early. So that's the whole concept with hodling, right? The halving is the event that brings about scarcity on Bitcoin. Bitcoin sits around 52% of all the investment in the market. So if 52% of the market is in scarcity, what does it tells you? That that alone can drive the market costly. All right. Okay. So yeah, the movement of Bitcoin pumps it, right? What's the difference between buying and swapping? Same thing. Because when you are buying, so a little bit different, it's still swapping, all right? What you are buying, uh, you need to give in something to get what you want, right? So technically it's swapping. Selling is also swapping. So how you buy? So technically we can say you buy through swapping, you trade, you sell through swapping. Swapping is a term that happens, is a term centered to decentralized exchanges. Uniswap, Pancake Swap, Sushi Swap, you know. It's the same thing as trading in centralized exchanges because you are giving in something and you're collecting another, right? So it's just terminologies. All right. So um, we're going to stop here and let me stop the recording. At the same time, halt the live streaming on Facebook. I want to believe we have viewers from Facebook. So tomorrow, we meet same time, okay?